There's a phrase I hear from investors quite often, especially older investors, when we go into market downturns. I'm too old for downturns. They're basically saying, I don't have enough time to recover from a market downturn, and typically means they want to move their money to cash. Now, number one, they're walking away from diversification, which can be really, really dangerous. But here's the other thing. When I look at stocks historically, we own them because of protection against inflation, which is the dollar dropping in value. When I have all my money in cash, I'm putting it all in dollar-denominated investments, and the dollar keeps dropping in value. So historically, my return for stocks is about 7% above inflation and 0.5 for treasury bills. So that's one of the reasons that we want to continue to own stocks. The other thing is, I want you to think about this. Life expectancies. If I am a 65-year-old male, my life expectancy is still about 17.8 years. For women, it's about 20 years. Joint husband and wife, about 27 years. If we look at 75-year-old male, it's about 11 years, about 13 years for women, and jointly about 18 years. And for an 85-year-old male, it's about 6 years, about 7 years for a woman, and jointly at about 11 years. All of those periods in time are significantly longer than it has taken, according to the New York Times, to have historically recovered from a market downturn. On average, according to the New York Times, it's about 111 days throughout history. If you look at 10 to 20% downturns, it ranges anywhere from you have 118 days in one recovery, 322 days, 98 days, 126 days, and it ranges, but they're all less than a year with 10 to 20% downturns. But this has been a bigger downturn than that, Paul. I mean, we're looking at the coronavirus. It's been much longer. Well, it's been more like maybe 1973, 74, right? In 73, 74, you had a large U.S. stock downturn of about 40%. Small companies went down about 60%. Well, if you were in an aggressive portfolio with large, small, and large value in all these different asset categories diversified, how long would it have taken to have recovered from that downturn 73, 74? Well, by the end of 1975, as you can see, you would have been pretty much recovered from that downturn. Well, what if you were in a 60-40 portfolio, 60% stocks, 40% bonds, which would have been a more apt mix for an older person? Well, you recovered even sooner, and you didn't go down as much because of the short-term, the fixed income, the high-quality fixed income that you should have in your portfolio as an older investor. How about the big doozy of a downturn, 07, 08, 09? How about that downturn? Well, we went down pretty significantly. If you were in an aggressive portfolio, it did take till about April of 2011 to get back to even. If you were in a 60-40 portfolio, which is, having those bonds in there, it took less time and you didn't go down as far. And having those bonds allows you to pull some money out from the bonds to live off of, to buy time for stocks to come back. So that's why we want to have those bonds in the portfolio for safety. Now, if we go back to life expectancies, again, these time periods are significantly shorter than the life expectancies of men, women, and joint at age 65, 75, and even age 85. But what if I don't live that long, Paul? Well, then really, in actuality, we're accumulating money for heirs, and it's a non-issue if you think about it. Well, what if I live a lot longer? Well, then we're dealing with needing to own stocks because long time periods tell us that we need to own equities and protect ourselves from inflation. But what if the stock market goes down and never comes back? Well, that tells us that earnings went down. And if earnings go down, that means that we don't have any taxes. If we don't have any taxes, we don't have any government. If we don't have any government, we probably have bigger problems on our hands. But this is different. This whole thing feels different with coronavirus, Paul. I mean, it's just a different, you look back through history, there have been a lot of things that felt really different. How about the Great Depression? Stock panic, the stock market panic, the market crashes. We had a dust bowl. We were worried about our food supply with the dust bowl in the 1930s. Hitler seizes power and the army's backing him. There was a lot of scary stuff going on in that period of time. That was scary. Those were scary times, really. Now, how about post-World War II? Then we go into the atomic age, and we're worried about, oh my goodness, atomic bombs, and Russia's got an atomic bomb. We're going into the nuclear age, and and we could destroy all humanity as we know it. Again, that is literally annihilation we're dealing with right here. How about the energy crisis in the 1970s? Jimmy Carter talking about we're running out of oil, we're going to run. And this was what was powering the factories, our automobiles, our transportation, flight, everything was based on oil, and we were running out of oil. And you think about that, that brings the entire economy to a halt. Very scary stuff if you lived through it, and a lot of us did. Then the other thing we were living through at that time is that we were supposed to go into an ice age. They said we're preparing the world for a new ice age. Time magazine called it the big freeze, and Science and Mechanics says experts say a new ice age is imminent. And space satellites were showing that it was coming fast. Scary stuff. And the other thing that was happening is we were running out of food. Our ability to produce food we literally didn't have enough because of the growing population. There was a really popular book at the time called The Population Bomb, and it said that we were going to have all these people and we couldn't feed them. You talk about it feeling different. That felt different. And then Time magazine said, Y2K, the computers were going to shut down. We run everything on computers and it's going to be calamity. All our power plants were going to shut down as a result of this. Bad stuff with Y2K. And everybody said this time is different. Then you basically have terrorism on our soil. Airplanes crashing. You don't even need a nuclear weapon anymore. They're using our airplanes as weapons to attack us from the outside. And maybe they're going to bring an atomic bomb in as well to totally wipe us out. Again, scary. And they said, realize this is World War III. They want to get us, and they want to get us bad. Then you have 1 in 7 thinks the world's coming to an end because of the Mayan calendar. People were worried about that. Now, what do all these things have in common? None of them came to fruition, and we innovated our way around them, and we dealt with the problem to get ourselves around it. With oil, for example, we were only able to drill straight down to get oil. Then we learned how to drill horizontally. We figured out how to deal with the problem. So that's the innovation. We're always trying to move forward. We're always trying to fix our problems and deal with the issues at hand. And so everything always feels different. That's the point I like to make. It always seems like there's something different going on that we've never dealt with before. The Twilight Zone always like to deal. I grew up on the Twilight Zone. People, if you watch this, you remember they were always talking about nuclear war and atomic bombs and all of that. And they loved doing shows on it. But they also like doing shows on alien invasions as well. That was another thing that they were obsessed with. When it comes to, do we have enough time to recover? Well, historically, if we go and stick our money in cash, that can be a problem. We did a little study. We looked at 1929, and if you had been in a 60-40 portfolio, 60% stocks, 40% bonds, you hit the market bottom in 1932. What if you moved to cash at that point? How long did it take you to recover all of your losses if you stayed in the 60-40 portfolio? Well, you were completely recovered by 1935. How long if you went to cash? It was about 500 years based on the Treasury bill yield at that point in time. When it comes to, do I have enough time to recover? Well, not if you go and sell out historically out of stocks and jump into fixed income and bonds and panic. It's never the right time to panic when it comes to investing.